Welcome to our daily YouTube session. In today's class, we will discuss the news that is credit card spending in Forex to come under LRS, that is Liberalized Remittance Scheme, and it will attract a TCS that is of 20%. The move has been criticized by the consumers, but we need to understand why this is in news, what is LRS scheme, then what are the laws with respect to Forex, that is FEMA. We will also see what kind of transactions are covered or prohibited with respect to this and what is the possible impact of this move. So, let us start with our class, and first of all we will see why this particular thing is in news. See, government has amended the rules, that is Foreign Exchange Management Act, to bring international credit card spends outside India under liberalized remittance scheme. What is the meaning of this news is how we should interpret it, that all the credit card spendings that are done outside India will be covered under liberalized remittance scheme. Earlier this was not the case. The forex, basically the credit card spending that was done outside India was not covered in this scheme. And what is this Foreign Exchange Management Act? All the basically transactions with respect to regulation of money outside India by its citizens, okay, it is covered under Foreign Exchange Management Act. So, the transaction is being done outside the India, so that is why we have seen regulation of money, it is done under an act that is called as Foreign Exchange Management Act. The rules were changed with respect to this, and international credit card spendings were brought under the liberalized remittance scheme. So, what was the news? The news was that the spending by the international credit cards will attract a higher rate of tax collected at source, that is called as TCS, at 20% from July 1. So, first of all we need to understand what is liberalized remittance scheme. Before understanding this news, it is essential that we understand the technical terms that are involved here. So, what is liberalized remittance scheme? See, resident Indians, first of all be very clear with respect to the words, this can thing be asked with respect to your prelims examination also. Resident Indians or people resident in India, they are allowed to transfer foreign currency under the foreign exchange regulations. As I have already stated that all the foreign currency exchange regulations basically are done under the act that is called as FEMA. That is why we have seen that the transfer of foreign money outside India is governed by Foreign Exchange Management Act 1999. So, hence to regulate transfer of funds within a specified limit, RBI brought that scheme that is called as liberalized remittance scheme. So, what is this liberalized remittance scheme? See, it was brought by RBI in 2004. It allows resident individuals, again very specific here, it allows resident individual to remit a certain amount of money during a financial year to another country for investment and expenditure. What does this essentially means? It means if you are a resident individual of this country of India, you are allowed without any basically what we say objection to remit some money to the foreign foreign country, that may be for investment or other specified purposes that are listed by the government of India. Okay, for the transactions that are allowed, that we will also be saying you can remit certain type of money. Then basically how much that money can be remitted? Individuals can remit basically $250,000 in a financial year outside the country under this scheme that is called as liberalized remittance scheme. Again I am repeating it to provide a clarity. Resident individuals living in our country basically can, if they want to invest or basically indulge in some transactions outside of our country, RBI has brought a scheme for them that is called as Liberalized Remittance Scheme. Under this scheme, $250,000 can be remitted by resident individuals to the foreign country. Now, it is under this scheme that international credit card spending has been included. Earlier, international credit card spending was not a part of the scheme. Now it will be counted with respect to $250,000 that are allowed to the individual to remit outside. Moving forward, basically, what are the transactions that are allowed within this? Basically, the major transactions that are allowed are, for example, if you are going for private visit, the expenditure that is involved. If you are going for a business trip, that will be allowed here. Then medical treatment, that money can be remitted outside. Then you want to make a gift or donation with respect to some of your relatives or your friends. Then facilities for studying abroad. These kind of transactions are allowed under LRS, and they will be basically covered under the amount that is allowed, 2,50,000. Now under this basically transaction, one more transaction has been included, that is international credit card spending. International credit card spending, that has been included within this. Earlier this was not a part, it was not subject to regulation. Basically, if individuals, for take example here, if individual wants to is moving outside for a business trip, for example, the business trips were basically a part of this, basically that money that was allowed, but international card spending, basically for example for shopping purposes, that was not allowed, that was not regulated by the government of India. Now that is also being regulated under this scheme. Similarly, there are some transactions that are also basically prohibited under this scheme. For example, buying and selling of foreign exchange. Basically, you cannot indulge in foreign exchange abroad, shareholding activities, then purchase of lottery tickets. Basically, LRS scheme also restricts that. Then prescribed magazines that are not allowed, and so on. One other major restriction is that any item that is restricted under Schedule 2 of the FEMA Rules 2000, that is also restricted under this scheme. And one last, that is all the countries that are declared as non-cooperative by the Foreign Action Task Force, they will also not be allowed and restricted under this particular scheme. You cannot go and basically indulge in these kind of activities under this particular scheme. So the question that may be asked with respect to your prelims examination, it may be asked with respect to LRS scheme only, that what is the purpose of this scheme. Then they can provide or increase the technical level of this question, that how much amount is allowed under this scheme. Then they can ask a question with respect to transactions that are allowed and transactions that are prohibited. So you must be very clear with respect to these things. So what is LRS scheme? The money that is allowed to remit outside to a foreign country by a resident individual, and that money is basically in a financial year, it is basically $50,000, and there are some activities and there are some restrictions. Now moving forward, now we have learnt that basically what is LRS. Now our news also states that basically, just give me a second, that while credit card spendings have become a part of LRS, this was the first part. Second part was that it will attract 20% TCS. So what is TCS? Tax collected at source. It is first of all a direct tax levy. There are two forms of tax we have already studied with respect to this our classes. First is direct and second is indirect. So TCS is a direct tax levy which is collected by the seller of a specified goods from the buyer and deposited to the government. It means whenever you will be basically doing shopping at a particular place, the individual will basically cut a particular TCS, and then he or she will basically deposit it to the government. Now central government has brought transactions through credit card outside India under the ambit of LRS with immediate effect. Further, what other change the government has made is Rule 7 has now been omitted, paving way for inclusion of such spending under LRS. Earlier, Rule 7 of the FEMA Act basically provided for exclusion of these kind of activities from the LRS, but this rule has been omitted now, paving way for the inclusion of these spendings under the LRS. Further, what is the impact of this particular move? The impact is basically, first of all, it is said that it will create hassles or will have a adverse impact with respect to the consumers. Why? For the simple reasons, because that taxpayers would be able to claim 20% of the TCS at the time of income tax return. This can be basically what we say claimed back by the consumers. So, what is the need of first of all deducting it? So, that for that purposes it is being criticized. Then the current move will straight away make foreign travel 20% more expensive, because the foreign card basically, for example, if you are doing basically transactions on your credit card, okay, the all will be basically listed under the LRS scheme, and it will make your foreign travel expensive. No doubt this amount may be claimed back by the taxpayer, but it will remain blocked. It is refunded in the income tax at the end of the year. For example, you are going for a foreign travel in August, and basically next year May is the filing return basically period. Now till this time this amount will remain blocked. No doubt you will be able to claim it at the end, or the government will refund it, but it will remain blocked for this particular period of time. Then further, it creates a very Herculean task for the banks, because they will have to keep the track record of each and every transaction, and it is very difficult to identify if every card user basically how they do their transactions, or what for what purposes they have done their transactions. So this type of activity basically creates a humongous task for the banks to regulate the transactions on the credit card, which is not a easy task. So that is how basically it is adversely impacting the banks, and it is also adversely impacting the citizens in general and taxpayers in particular. So what we have discussed with respect to over this video, we have discussed again what are the technical aspects, what is LRS scheme, then we also discussed what is TCS, then we also discussed what are the restrictions and what are the allowed transactions under LRS. Then we also discussed basically the impact of this particular move. So that was all that was there with respect to this particular news, and the question may be asked with respect to LRS here, or basically what is the tax collected at source with respect to your prelims examination. So this was all with respect to today's video. Thank you very much.